Good Thursday morning. If you have been watching me since 9 a.m., you should know already that I'm in a mood today, pretty on fire. To that end, here's one of the only things I care about in markets today. It's not yesterday's jobs report. It's not even the CPI data out tomorrow. It's the rout in software stocks. It's unrelenting. And since I'm getting asked a lot about what's going on to happen or what could happen next to these stocks, here is what I want to offer you right now. One, there are thousands of other stocks to buy. Why are you so obsessed with software stocks that have totally crashed out? The market is telling you it hates these stocks. So why are you still sniffing around them? Wait for things to stabilize before tying on that hero's cape around your neck. And two, you will know the bottom is in these stocks when a key player comes out with evidence of business accelerating in the first quarter versus the fourth quarter. Doing that would be a super impressive sign given the AI developments happening at Anthropic, OpenAI, and Google, and like 30 other companies I'm probably forgetting. I challenged Salesforce CEO Mark Benioff, for example, to pre-announce first quarter earnings this month. And as they say, that is that. All right, Bitcoin Investor Week is underway here in New York City. Talk about perfect timing for this with Bitcoin well off the highs and the crypto bulls searching for the next big catalyst. I'm sending it down to my colleague Julie Hyman live at Chelsea Piers alongside Bitcoin Investor Week host and founder Anthony Pompliano. Julie, take it away.
That's right. I'm here with Anthony. He's been here all week talking about crypto. He is CEO of ProCap Financial, and as you said, he organizes this Bitcoin Investor Week. So, how you feeling, Anthony? What's the vibes this week? As it feels like maybe we're in another crypto winter. Is that what people are talking about?
Well, I think if you look around the room, no one's freaking out, right? Everyone is cool, calm, and collected. I think they believe that Bitcoin is an asset that is going to do very well over the long run. And most of the people who are here, they've now lived through a couple different cycles, right? There are still some people who are coming into the Bitcoin market, but most of the people, they came in 2017 or 2020. And so they've lived through 1, 2, maybe even 3 drawdowns of more than 50%. Now, the thing that I will always compare it to is the global financial crisis saw public equities go down 50% in a single period. That has happened every 18 months for a decade in Bitcoin. And so the Bitcoiners are much more used to volatility than the traditional public market investors. And I think that's why you see people kind of just saying, look, we know where we are, we understand what's happening. Actually, if I liked it at $126,000, I'm more likely to buy it at $68,000.
So are you buying it at where it is right now?
I own more Bitcoin today than I ever have. And I think that you're going to continue to see people accumulate Bitcoin going forward because they understand the long-term value of a scarce digital asset in a world where they're going to continue to print money.
Where do you think understanding that you're talking about a long-term thesis, what do you think is going to happen in the short term? Do you think we've seen the bottom yet? Do you think we're going to bump along further here?
Calling bottoms is really hard. I'm not really sure, but I do think that one of the aspects that people are not paying attention to is that deflation is a much bigger risk than inflation in America. So if you look at Bitcoin historically is a forward-looking market. And so in 2020, Bitcoin ran up 600%, and then we got hit with very high inflation. And investors were saying at the time, I'm buying gold in Bitcoin because I see it as an inflation hedge. I think Bitcoin will be the fastest horse. Now what I think you're seeing is investors are saying, wait a second, this inflation thing is not going to be a problem. I believe deflation is the bigger problem. And so they are actually going towards some of the hard assets or things that would do well in a deflationary type environment. So Bitcoin's just got to hang in there, right? This is just going to be a couple of months here where I think people will see liquidity drain from the market. We'll see some deflationary concerns. The government actually, I think, is going to print more money rather than less. I think they'll bring interest rates down, and we'll be back to all-time highs in Bitcoin in the next couple of years.
I am curious, because it does feel like the market now in Bitcoin is different than it was in 2020 or 2018. I know you're one of the folks who were saying and really this was a mantra among many people in crypto, we're waiting for adoption, we're waiting for institutional adoption. Here's institutional adoption. Maybe be careful what you wish for because it does come with advantages and disadvantages. Things like there's lots more liquidity now, but not on the weekends or overnight when you have tended to see some of these sell-offs. So how do you think about that issue and maybe the lack of a floor because these institutions are not stepping in?
I think Bitcoin made everyone capitulate. Every single one of these institutions used to say, this is stupid, don't pay attention to it, it's going to go away, it's going to go to zero, the government's going to shut it down. And guess what? Now they all have a Bitcoin strategy, they're launching Bitcoin products. Bitcoin is the single most successful product launch in Wall Street history with the ETFs. And I think that ultimately Bitcoiners, they won. They have infiltrated Wall Street.
Well, have they won if that's one of the reasons that the price has gone down?
Who cares that the price is down in the short term? Bitcoin went from a penny to over $126,000 in 15 years.
I mean, come on, though,
winning.
but you have all these leveraged products now that are on top of Bitcoin, right? And so the people who are leveraged, when it went down, a lot of them lost their shirts because you have this increasing financialization and institutionalization. There's nothing bad about that?
Just compare it to last April when the stock market went down 20%. More people lost money then than they did in Bitcoin, right? The stock market's much bigger in terms of a market cap percentage. And so people are going to win and lose money all the time in markets. That's the beauty of markets. But if you simply dollar cost average into Bitcoin and you hold it, you're going to do just fine. And so if the gamblers on Wall Street want to come and gamble on a 40-vol asset, let them do it. Because what that does is it provides opportunities like this. Because those people want to use leveraged products and gamble, it allowed for people now who are just coming into Bitcoin to start accumulating at $68,000 rather than $126,000. So it's a gift from Wall Street that they push the price down and allow people to acquire more at these lower prices because it's not going to change where Bitcoin's going. If it doesn't go to zero, it's going to $1 million at some point.
Are you willing to tell us how much you're down, or are you down? I don't know where you acquired.
Bitcoin?
Yeah.
1 Bitcoin equals 1 Bitcoin. I'm never down.
Come on, Anthony. I mean, so I guess my other question is, are you transacting in Bitcoin? Are you, what is the sort of end game?
I use Bitcoin every single day to do the single most important thing Bitcoin does, which is protects my purchasing power over the long run from a government that continues to steal purchasing power from the people.
But you have to be able to purchase with it in order.
You don't have to do that.
How does it protect? Walk me through that then, how it protects your purchasing
people take
power.
dollars that are being evaporated in their face. The dollar has lost over 30% of its purchasing power since 2020. What do? They try to get out of the dollar. You can go into real estate, you can go into gold, you can go into stocks, you can go into Bitcoin, you can go to any asset. Bitcoin has done a fantastic job of protecting your purchasing power over that period of time. If you go back, even with all the volatility, Bitcoin is still up something like 700% since the fall of 2020.
This is something, though, that I've had this conversation with someone like Michael Saylor as well, but I've never been able to wrap my head around it. I understand what you're saying. However, if I'm buying gold or real estate or what have you, at some point we'll convert it back to dollars and use those dollars. But my understanding is that's not your plan. You're just going to hold the Bitcoin. But it's not like you die and you just have a bunch of Bitcoin? What's the end game?
I think that the fiat mindset is to constantly go back to dollars. And if you go and talk to a financial advisor, they'll say, let's go to safety, let's go to dollars. I believe, like millions of other people in the world, that dollars are the riskiest thing in your portfolio. It's the only thing in your portfolio that is guaranteed to lose value. Why would you consider that safe? It's guaranteed to lose value.
It's not about safe, it's about something you can use.
Well, I think that, again, I use Bitcoin every single day. And if you go back over thousands and thousands of years, families have decided to store their value that they have earned through hard work in things that persist over time. And so if you look at, let's say, Indian culture, people will go and they will buy gold and they will pass it down from generation to generation to generation. You cannot be the person who sells the family's gold. And so I think what Bitcoiners have realized is I'm going to take my Bitcoin and I'm going to give it to my grandchildren one day. And it's either going to be worth a lot or it's going to be worth a little, but I'm never going to sell it. No matter what happens, I'm never going to sell it. And I think that ability to pass on value over time is an incredibly valuable thing. And that's why simply holding Bitcoin is using Bitcoin. It's doing its job. And sure, people have talked about it being used to buy coffees or do all this other stuff. But the most important thing is to protect the purchasing power first. Only once it is protecting your purchasing power, then can you start talking about using it to buy certain things. And I think maybe the most important part is, why would I use something in a purchase that is going to be more valuable in the future? The whole reason why they devalue the dollar is because they're trying to spur economic activity. If I make the dollar less valuable next year, it'll incentivize people to spend it today. So I think you see stable coins being used for payments and Bitcoin being used for savings.
We'll see how it plays out. Anthony, and I guess that view that you have is why, as you say, people here aren't, jumping into the Hudson.
Well, me, Larry Fink, many other people, right, all now see the world the exact same way.
There might be some nuances there. Anthony, thank you so much for being here. Really appreciate it.
Absolutely. Thanks for having me.
Back to you, Soz.
Yeah, Julie, I don't know if you're able to get your lunch there after that interview. Good chat. Really enjoyed it. Looking forward to it. We're going to hear much more from Bitcoin Investor Week starting at 10 a.m. So get some questions over to Julie on X at Jules Hyman. Maybe Julie will even share her Bitcoin price prediction for the year 2030. We'll be right back with the opening bid roundtable. We'll dive into the topic I did want to discuss because I'm so wrapped up into the software stock sell-off. We'll be right back. It has been an interesting stretch for economy watchers. Why? Well, all sorts of reports are surprising to the upside. The jobs report on Wednesday thumped estimates. Corporate America is putting up better than expected sales and profits, and growth could be hot this spring due to some large tax refund checks for consumers. Let's pick this one apart. Art Hogan, B. Riley, Chief Wealth Market Strategist, and our very own Inez Ferre. Guys, before I get to you, just really fascinating exchange that Julie Hyman had with Anthony Pompliano down at the Bitcoin Investor Week. I'd love to get your reaction. Here's that clip.
In the room, no one's freaking out, right? Everyone is cool, calm, and collected. I think they believe that Bitcoin is an asset that is going to do very well over the long run. And most of the people who are here, they've now lived through a couple different cycles, right? There are still some people who are coming.
Art, it is amazing to hear how these Bitcoin bulls like Anthony, I mean, they remain locked in. They're staying long in their thesis. Should investors that still own a Bitcoin or other cryptos, should they be freaked out by what's happened?
Well, I'll tell you this, and I think the important point that Pomp made was that the original apostles of Bitcoin are certainly feeling confident because they know the kind of volatility that Bitcoin can have. It very often has 50 and 60% downdrafts. The new entrants that he also referenced don't know that, and that's probably, if that kind of volatility doesn't help you sleep at night, then perhaps you shouldn't have a large allocation here. And what has happened with Bitcoin spot ETFs that came out a year ago, we do have a lot of new entrants. So there's a lot of folks that said, now that I have access to this, ease of use, I can put this in my portfolio. And I think that's where you're seeing a lot of selling pressure coming. It's like, you know what, we didn't sign up for this. We don't like 50% drawdowns on a regular basis, and we're not believers anymore. So I think that's part of that volatility. I think the spot ETFs brought in a whole new group of investors that weren't ready for this.
And as you cover crypto, every day I have you on here, you talk about crypto and a little bit of gold. Haven't investors already freaked out?
Some investors have, but look, I thought what was interesting about Anthony's comments were he mentioned Larry Fink and some of the big wigs that are in the space now, and that wasn't the case perhaps a few years ago. But also what he mentioned was, don't forget, this is to protect your wealth, to protect purchasing power. And I think that that's really the key when it comes to investors that are looking at crypto and that have been going into crypto over the last couple of years, especially the newer investors, is why are you in it? It's because you want to protect your purchasing power. And that was his point there.
Let's get back into the economy, because I really am fascinated by what is going on with the economy, some of these upside surprises we're getting. Art, why, before we get into how to invest for a surprisingly strong economy, because I think that's also something worth getting into, is there more happening in the economy than some of these tech companies building an AI data center out there in the desert somewhere where there's no homes? Like, I'm trying to figure out, like, where else is the economy surprising?
Well, I would tell you the economy is surprising in the number of healthcare workers that we needed to hire last year and certainly last month. So if you look at the non-farm payroll numbers, which was a very pleasant upside surprise, double what expectations were, unemployment ticked down, all of that's very positive unless you take a step back and say, where's it coming from? We got 5,000 manufacturing jobs, the first time we've seen a positive number of manufacturing jobs going all the way back to last November. So it's not a broad labor market increase here. So I think there's pockets of strength here, but I certainly think you have to be careful with what you look at in the economic data stream. What much more importantly to me will be, does the CPI look anything like the PPI did last week when it comes out on Friday? And should we still be concerned about the stickiness of inflation? But in general, while the market is broadening out, and we have 5 sectors in the S&P 500 that are outperforming the index versus 2 last year, the labor market is not reflecting that.
Inez, where have you been seeing economic surprises?
Look, Art just mentioned inflation, and I will say that I'm starting to hear a lot more talk about deflation. Fundstrat put out a note basically saying that this carnage that we've seen in the software space, that basically indicates that AI is productive, that there are productivity gains to companies because of this. And you can think of it as an input cost that now costs less because companies spend so much on software and SaaS. And that will mean deflation going forward. I think of it in the terms of jobs and the deflation in the job market, perhaps, because we have been hearing more and more from companies that are talking about productivity gains when it comes to engineering, et cetera. So nevertheless, the bottom line is what they're saying is that
expect to see some deflation, and because of that, perhaps a dovish Fed.
Art, that if the economy is poised to surprise the upside over the next few months, what's the investing playbook for that? Because that is, I think, a different playbook than what we saw or what we have seen in the prior few months.
Yeah, I think we're making a significant transition that started in the fourth quarter of last year and well into this year, where it's not just about technology and communication services. And that's played out both in the playbook of small caps. The environment is finally right for small caps to outperform, and they have significantly over the fourth quarter and into this year. The environment is right for cyclicals, right? So whether you look at materials or if you look at industrials, cyclicals are doing better than some of those technology, artificial intelligence darlings we're doing for the last 2 years. I think that's important as well. So I think you can take your playbook from what is actually outperforming. The market's broadening out. Don't sleep on the small caps, and remember cyclicals do well in the type of economic recovery we're going through.
All right, I'm sure you saw President Trump's comments recently. I believe they were to Larry Kudlow in an interview that he thinks the economy can grow 15%. Unclear if he was joking around, but how should investors view a comment like that? Is that, from where you sit, is that even possible?
That would be like saying at the beginning of the season the Jets are going to win the Super Bowl. Probably not going to happen.
Totally
right?
impossible.
Right. So I think when you take a step back and say, did he confuse the GDP growth with something else that he was thinking about that might have a 15 handle? Perhaps. I think that if you look at over the course of the last 100 years, the only time we had a GDP of 15% was when we were hyperspending on World War II. Other than that, we kind of sit in a world where it's somewhere between 2 and 3%, and that world actually works. That drives really good earnings. So if we can be north of mean, which is 1.8% GDP growth, which we have been for the last 3 years, have something between 2.5% and 3%, that's going to drive significant earnings. Taking a number like 15 is just a hyperbolic way of getting clicks, I think.
Art, you were getting some FTWs by the producers, the Yahoo Finance producers in our Slack channel. That is for the win, because I was going to try to stump you two on when the economy last grew 15%. Art, you nailed it. Show it. Fire it up there, team. There we go. You pointed out, Art, but also too here as well, coming out of the the COVID pandemic. So it has happened before, Inez. Maybe we're going back there because everybody's spending billions to build AI data centers.
Well, who knows if it's 15% really, but look, a lot of Wall Street, many Wall Street strategists are talking about a real acceleration, especially going into the second half of this year. And if you take a look also at the One Big Beautiful Bill, that's going to be a tax incentive for companies. Companies will be able to spend more. I mean, as long as the stock market can stay near all-time highs, that'll be good for tax receipts. It just is a matter of everything going in line. And as Art mentioned, you are seeing those parts of the economy or the sectors that are in acceleration mode. Energy, consumer staples even, industrials, all of these that talk to the thesis of a strong economy or a growing economy.
All right, I can't help myself. All morning long, I've been talking about this software stock rout. In fact, I think I've been doing this every single day for the past 2 weeks. When does it end, Art, and what causes it to end?
Well, a couple things, and I think it's starting to end now, right? So, a week ago when we really ushered in Software-mageddon, and we've been playing this whack-a-mole game for what's AI going to destroy. Last week it seemed to be software. This week it seems to be financial services company. Perhaps lawyers will be next. I think that at the end of the day, we get to a place where calmer minds have to prevail here. So we got the IGV, which is the software ETF, got so oversold that it threw off a reading of 12 on an RSI, a reading that hasn't been seen in the history of that index, right? Typically you want to be somewhere between 30 and 70. 12 is extremely oversold. Investors noticed that and then started to say, is Microsoft really going out of business, or is AI actually going to make them much more productive? And you can run that list over the majority of software companies, and I think that madness will start to sort of dissipate. The only problem with that is we're just going to move on to something else. It's like playing a game of Battleship. What is the next sector that artificial intelligence is going to sink? And this week seems to be financial services because somebody rolled out a new tax program. I think that's going to be an ongoing rolling process, but I think the worst of the Software-mageddon is probably behind us. Good, because this can't continue every single day. A company like Salesforce and Workday are not going out of business. And I think that's what the market is forgetting a little bit. Big thanks to Art and Inez. Always good to see you both. Appreciate it. Thank you. All right.
Coming up, Yahoo Finance's market catalyst, Julie Hyman, is coming to you live from the Bitcoin Investor Week, probably surrounded by a lot of Bitcoin bulls and some free food. We'll be right back.